Welcome to the Enterpriser podcast. Tina Capobianco is from JD Factors. They are a sponsor of the conference. We're really excited to have you. How was your trip from Toronto?
Hi, Liam. Thanks for having me. My trip was great. An hour-and-a-half flight, no turbulence, a little bit of de-icing, but it was great.
Awesome.
Happy to be here.
Very good. So, Tina, you've been with JD Factors 14 years, right?
30 years.
30 years. Okay, so I looked on LinkedIn and I saw 14 years.
14 years as Vice President of Canada. Yeah,
Okay.
I've been this is my 31st year. So celebrated 30 years with them last year.
So I'm guessing then by tenure, are you one of the founders or?
So the company was started in 1989 in Canada.
Okay.
The original owner bought a little factoring company in Toronto. And I came to work with the company in 1992. Mm-hmm. There was 4 employees at the time.
Wow.
Really, I had no intention of, didn't know what factoring was, didn't really have any intention of going into finance. I was trying to become a teacher, but I graduated in 1992 from university in the heart of a really bad recession. There was no teaching jobs, no teachers' college positions. So a friend of mine worked at JD Factors, and he said, we're looking for a bilingual receptionist. I said, okay. Does it pay salary and benefits? Yes, I'm there because
Wow.
I was broke at the time. So I started, and the day I started, my friend who was there actually quit. So my boss at the time said, well, now we have a position for a junior account executive. Would you like that? And I said, sure, pays the same. And that's really how it started. And I just got a natural knack of dealing with clients, understanding sort of their heartaches, where they needed help. And I don't know, I never looked back since. Still tried to get into teachers college for a couple years. Mm-hmm. And when that didn't happen, I just decided I'd focus on the finance part. And what I love most about my job is just helping small businesses, helping business owners, entrepreneurs really get a handle on their business, help them grow. Not everyone is a success story. Unfortunately, we've seen a lot of bad business decisions made, but the successes definitely outweigh the losses.
Awesome. Yeah, I think it's a great opportunity that we kind of had here. It was almost like a coincidence that you guys were in the city. And our season 2 of the Enterpriser podcast, we had already promised that it was going to be video and audio. Like we're moving into YouTube as well as having it on all the stations. But I thought it was really a great coincidence that a company that aligns with our values as well. I mean, we exist to help entrepreneurs, right? We exist in different arenas to help entrepreneurs, but that's our purpose. And for you guys to be in the city the week that I'm doing a whole bunch of podcast interviews, right? To be able to do it live, I think is really stellar. So we're really happy to have you. Thank you very much.
Sounds like this was meant to be.
Yeah, I think so.
Yeah.
I think so. I think that your sponsorship was meant to be. I think that once we fill the listeners in a little bit more about what you guys do, I think that it'll be a win for sure. Cool little story. I mentioned it earlier, but I used to sell factoring loans, or attempted to. I sold a few. A guy that I knew was trying to get into the industry of factoring, and I don't think that his business was built the right way, but it was a neat little interesting, venue a neat little venture that I went down, almost 10 years ago now or so, something like that. So I understand it a little bit, but what I would imagine some people or a lot of people don't is what factoring is and how that works. So I would hope that you could explain for the audience what factoring is and how small businesses can benefit from it.
Sure. Well, factoring is the sale of a completed accounts receivables. So if you are a transport company, and I'll use that as an example because a lot of our clients are in the transport industry. You take a load from Halifax to Winnipeg, you finish that load. So now you have basically to take another load and you need money to fuel your truck to go on to the next load. Mm-hmm. You've completed that load. You submit to us the invoice with the bill of lading that's signed for that completed work. You send it to us. We buy that receivable and give you the money right away. Right. So now you have cash flow to fuel your business. You take that next load, and it's just a rotating thing. We buy an asset, so we're not giving you a loan. You have nothing to repay, JD Factors in particular, we're really the only non-recourse factor in Canada, which means every invoice we buy, we credit approve. So we say that this customer is a good credit-worthy customer. If they go bankrupt or can't pay because they become insolvent or have cash flow issues, JD Factors takes the loss, not the actual transport company. That's super important, especially now where looks like we're going into an economic downturn or a recession. It's really important that when you've sold that asset, it never comes back to you, so you don't have to worry about repaying it, as opposed to recourse factors who always charge back the non-paid invoices to you.
Yeah, that was something that I was surprised about because, as I said, I had a bit of experience with factoring. I didn't even know it existed, that you could have factoring without recourse. And I think that's a really great, unique selling proposition or USP for you guys. And I'm sure it probably inspires confidence from your clients as well. Yeah, so what I wanted to talk about with regards to that, like what you're providing is an influx of cash. And with small businesses, I mean, like cash is king. If you have to have that operational cash, and what I think what happens is that a lot of small business owners, they spend a lot of time developing their own product and their own way to provide that product, right? We call it the MVP, the minimum viable product, and I think that that's where the game should begin. That shouldn't be the end. Like if you're a service provider and you provide a service to somebody, you've put all your time and thought into how you provide that service to somebody. That should really be the easy part, not the end of the game, right? The end of the game comes in when you are collecting from your clients who you've provided a service for. And I've run into a lot of people, and even when 10, 12 years ago when I started in business, I didn't realize that there was such a thing as a company who wasn't going to pay you for 90 days after you provided a service. I was like, what? What are you talking about? Your payment schedule is 90 days? Like, I got payroll to cover, right? And it took me a month to provide this one service for you, and now I've got 90 days to wait. Like, it really surprised me. Now, I didn't, at the time when I first started out, I didn't realize that there were, ways that I could get cash flow faster. I developed my own sort of way of, collecting my accounts receivables faster. But that's really what I think that should be on an entrepreneur's mind, just as much as their service itself. It should be, how much do I have in accounts receivable? How am I collecting that accounts receivable? Am I doing everything I can every day to collect that accounts receivable? And if not, do I have any services available to me in order to help me, like JD Factors?
The biggest mistake I think entrepreneurs make is they really undervalue what they're doing. So they want to provide a service or a product to their customer, and they sell it. And now all they're waiting for is when that customer is going to pay again. They don't put a lot of value in that needs to be paid before that next order goes to them. Their just thought is, I have to get that sales number to a certain level. Well, you could sell $1 million of product and service. If you don't get paid, that $1 million is worth nothing.
Absolutely nothing. Yeah.
So what we try and teach our clients is you have to manage your cash flow. So if you want to extend 90 days to somebody, you have to have the means to wait and support that 90 days. So either it's a line of credit with a bank, your own personal money, or factoring. Factoring, the benefit in it is that we grow with you. We don't require audited financial statements, even accountant prepared financial statements. We rely on the receivable. So as long as you have really good customers, you're delivering your product or service on time, they're accepting it, you could grow by 50% in 3 months, and we continue to grow with you. There is no bank on the planet, especially in Canada, that's going to grow that fast because they're not geared to just grow with a business. They want to see performance. They want to see profitability. Profitability is important to us only so you know that the client isn't going to run into cash flow needs down the road. But if you have good paying customers, credit-worthy customers, that's all you need to expand on a book of business. And entrepreneurs need to value and understand that they have to get paid for their hard work.
Mm-hmm. Absolutely. So you said when we were talking earlier that you're new to, we were talking about how we would say it, but you're new to Atlantic Canada. What are your main clientele, or are you expanding your clientele base?
So we've been trying to grow or expand to Atlantic Canada for a few years now, and we tried to do it from Toronto, where our head office is for Canada. And just like we have an office in Quebec and an office in Calgary, regionally, Canada, people in Atlantic Canada want to do business with someone in Atlantic Canada. So the business we did out here was really just organic. It flowed naturally through client referrals or even just, the World Wide Web. So now we actually hired a business development person located here in Halifax to develop factoring out here. We factor any industry except for construction or anything with a progress billing type of component.
Right, yeah.
But anything with a completed sale, that's business to business, we factor any industry in there.
Okay, cool. And just because it was meshed in with what we were talking about before, can you tell me more about what your unique selling proposition is as a company?
Well, what makes JD Factors unique is that we work one-on-one with our clients as partners. So we help them develop a good business plan. We help them build a great customer base. Our non-recourse factoring helps them to be sure that when they do business, they sell that receivable to us. They never have to worry about coming back to them. And everything is customized. We have clients that factor 50 invoices every single day, and some clients that factor 200 invoices once a week or every 2 weeks. Our goal is really to focus the financing on what our client needs. We're small enough that we can provide that personal service. We have an amazing team of account executives that work one-on-one with our clients to understand their business. So they know, well, every third month of the year, this is an obligation our client has. So cash is really tight. We may have to make an advance of some kind at that time, but we know the next month everything's going to come in line. We have some seasonal clients, some clients that we know cash flow is really, really tight for a number of reasons. So our AEs are trained to understand their clients, their needs, and we really bring a personalized and customized touch to every relationship we have.
Awesome, great. So I got a question, and you kind of touched on it a little bit, and that's why this is something that I had thought about in the past too. If you're taking over the accounts receivable for a customer, and they fall in arrears, but let's say that they were a good customer up until that point, would that not further alienate a customer who can't make their payments? Does that not be able to communicate with the seller anymore, or how do you mitigate the possible disgruntled customer just because they can't make a payment, to bring them back around so that they still trust the service provider, but then also trust you guys as well?
Well, what's super important in our approach is that we know we're the middleman middle person between our client and their customer. So many of those customers, especially over the last year and going forward, have had trouble, right? Where they used to pay in 30 days, now are paying in 60 and 75 days. So we always communicate with our clients and say, okay, here's the situation. What do you want us to do? We'll support you, but at some point we have to start thinking about cutting them off. And it's an ongoing conversation with our client. I can give you an example right now. I have a transport client in Southern Ontario who did a ton of work for a produce company in Southern Ontario. And we worked with them for 2 years, bought millions of dollars of receivables. This carrier did so much work. And all of a sudden, and they paid like clockwork, 35 days, we got an electronic payment into our account. Those payments started to get a little bit longer,
right? Okay.
And longer and longer. Now we have a substantial balance that's not paid at all, because the company obviously had some kind of cash flow issue. So we got to a point where we're at 90 days. We said to our client, we can't support this anymore because now we're not getting paid. And it doesn't make sense that you do any more work for them. So my client stopped working for them. We stopped getting payments altogether, and we're now pursuing them legally because they had told us quite openly and honestly, they're paying the carriers that are working for them. They're not going to pay us for work that my client did 4 or 5 months ago because they don't have the cash to do it. So now we have to go to court because we're a non-recourse factor. That's our loss, not my client's loss.
Yeah.
But we did advise them, we're cutting them off. So that's an extreme case because they stopped paying altogether. But we want to work with the client and their customer because no one wins if you just cut the cash right off the bat.
Right. So that's actually, it's kind of an interesting angle. So that's actually helping the entrepreneur to understand where their own cash flow problems are coming from before they get the brunt of the blow from their cash flow problem. Your individuals working with them are like, okay, this vendor and this vendor are not paying on time anymore. So should you continue to do work for them? Whereas if you were just dealing directly with that vendor, you may feel that you're so far in, they owe you so much money, you might as well keep working for them, right? And then you get yourself even further, but you're like, well, there's $50,000 there, right? I got to keep working. But so you guys kind of take part of that off of the entrepreneur's shoulders, but then also still advise them, like, probably shouldn't still be working for these guys because they're not paying their bills on time.
Well, and the flip side to that is we'll advise a client, okay, you need to stop working for this customer because they're not paying us, they're not responsive, they're not communicating, so we're stopping at this date. Mm-hmm. We do, the client still continues to work for them. Our portion ends up to be a write-off, but then they have a portion bigger or just as big as ours that they have to write off because they didn't listen to our advice. Mm-hmm. That's bad because if we're the credit experts. I don't know how to drive I don't know how to drive a truck. I don't know much about truck maintenance.
Me neither.
Right? But I mean, you tell me, how to analyze a credit or how to deal with a collection problem, I could do that. So when we tell the client, you need to stop working for them because we're having issues, this is a problem, mm-hmm. and they don't, well, now that's just an entrepreneur not listening and just thinking, I have to keep moving my truck. I have to keep driving. Mm-hmm. That's the problem.
I see. Okay. So I'm an entrepreneur. I have a line of credit for my business. I also have a healthy list of invoices that I could sell to factoring. Why wouldn't I just use my line of credit? Or what is the difference between someone who would use a line of credit versus someone who needs to use factoring? What are the differentiating factors there?
So a line of credit is a debt that you have to pay back. You use it, you pay some off, you use it again. And there's a cap to it. So it's definitely cheaper than factoring is, but there's a cap on it. If you want to increase it, there's a pretty considerable work involved in getting that increase through your financial institution if you want to get that increase to an amount that's more suitable to what you need. If you are presented with an opportunity to grow, big purchase order from your customers, mm-hmm. and you have the opportunity to provide that good or that service, well, that line of credit isn't going to cut it when your customer's paying you in 30 or 60 days. So a line of credit will restrict you. A line of credit is good if you're an established company, you're sort of at that stage where you don't want to grow anymore, you're actually looking to reduce costs. That's how you would do it if your customers pay you regularly every month at the same time. Factoring is for when a company is just starting up or they're in growth mode, because mm-hmm. a bank is going to want to see a minimum of 2 years completed financial statements for them to consider increasing a line of credit. Whereas with factoring, we just need to see purchase orders, some kind of commitment from your customer, not even the commitment, just an idea of what you want to do. And as those receivables come in, we just grow your line easily because mm-hmm. there's no, other than underwriting the credit of the customer we're buying, there's really no other work involved. So that's the best part of it. And there's no loan to repay. When you factor, you sell your asset. So your balance sheet is not compromised at all.
Awesome. So JD Factors has become a sponsor of the conference, and we're really excited to have you guys there. What I want to do is kind of ask the listeners to think of a few things that they can ask you guys. So what is it that they can hope to get by visiting you in your booth or meeting up with you during the event? What types of things can they learn? The same things we talked about here. Can they bring their own queries, their own invoices or questions about those? Can they ask you that stuff at the event?
Yeah, absolutely. I mean, what we hope to do is, number one, educate Atlantic Canada on what factoring is. If for those that don't know what it is a viable way of financing your business. It's really easy. There is no cost involved in starting up a factoring line with us. We could definitely talk about how to deal with your receivables. How do you deal with your collections right now? What kind of credit system do you have in place? Do you have any whatsoever? The other mistake a lot of entrepreneurs make is they tend to use credit cards, accept credit card payments. Well, that's not cheap either. And the issue is when you start to grow, then you start to lose control of that system. With factoring, you put a system in place where you sell a receivable, you know the terms that your customer is going to take to pay you. It just helps you build a more stable cash, a financially stable company that where you know where the cash flow is coming week to week.
Right. Okay.
Yeah.
So those are things that they're going to be able to meet up with you at the event, ask you, and you're going to be able to give them a hand. And obviously you're going to be there to educate. Tina, you're going to be on one of the panels as well.
Yep.
I see the benefit in factoring and have for years, but I hope that this conversation has shown people that there are other options, because I remember when I was in my early mid-20s, and I really sometimes it just felt hopeless, like how am I making payroll? Like, why aren't there more things out there that I can do to put cash in my hand? Because we're entrepreneurs. You said it earlier. We make the economy, right? We invent jobs.
That's right.
out of our heads and turn it into a thing that 100 other people can do. Why aren't there more options out there that will help that entrepreneur bridge a gap, or even build a better book of business over time, right?
The biggest shortfall entrepreneurs have is they think there's only banks to tap in for cash.
Yeah, true.
And because the Canadian banking system is so conservative, right? We have 6 banks really to deal with in Canada. So when an entrepreneur starts, they think, okay, well, I have to open a bank account, an operating account. When you go into the bank, your manager there will tell you, okay, well, here's a $5,000 business credit card. You have a $5,000 overdraft. You probably have some money saved up, or your parents, your grandmother gave you a bunch of money to start this business.
The angels, yeah.
Exactly, yeah. Right? And then you start the business and you're off and running. Now you have $20,000 of receivables and you're sitting there waiting, thinking, now what? How can I make the next book of business happen? I have this $20,000 that's just sitting there. So you go back to your bank. And the bank says, well, you've only been open 4 months. Yeah. You got everything we're giving you. That's it.
4 months, no.
You go to grandma, and grandma says, well, that's all you're going to get, because now I think you're a risk, because why aren't you collecting that money? Mm-hmm. So factoring, it's a product for any business, especially if you're in startup mode or growing, is the financial tool to use. Is it something that you should use forever? Probably not. You want to graduate to traditional bank financing, but we have clients that have been my clients for 15 years and qualify for bank financing, but have decided, no, this is so flexible and so easy. If I don't need as much cash this month, I won't take it. If I need more, I will take it. We're flexible that way. So I think businesses really need to get educated, especially at the startup or entrepreneur level. What are the ways that I can finance my business? It's not just traditional bank financing, because that's not going to grow with you, whereas factoring does.
Right. I was reading I've been reading a Tim Ferriss book, and I came across a quote in his book that I was reading last night, and it kind of just struck me that it was very similar to what we're talking about. One of the ways that the billionaires that Tim Ferriss has met, how they organize their lives, is they say, what goals that I want to accomplish in 10 years can I accomplish in the next 6 months? And so it kind of struck me true as with this conversation, and with my experience as a small business owner over the years, banks will help you grow, but it takes a lot of time to be able to be a bank financed customer. And so if you have a great business idea, as with a billionaire probably has a pretty good business idea, how can you accomplish things faster? Well, cash flow velocity faster cash flow is going to be a massive way for you to grow faster, so you can get those goals that you may have to, you normally would be sitting there with your fingers on the table waiting for your money to come in. But if you can get that money faster and you can grow with it, then you can start to accomplish your goals faster too.
Oh, and I think that's an entrepreneur's downfall. If we were able to teach entrepreneurs when they just start out and say, okay, so you need to scale up your business in a way that you don't put yourself out of business, because that's also another mistake many entrepreneurs do. They get to a certain point where they're like, okay, I've done all this and now I have no more cash to continue forward. So they think they go into more debt. And if you can, that's one option. But banks won't grow with you because banks aren't made to support growing businesses, right? Banks typically give you money when they see a history that you're able to pay back that money. So to get to that, you have to be at least in business a few years to be able to prove that to them. Now, if things go bad while you're in there, that's the risk that they take. But factoring grows with you, and it also can slow down as much as you need to slow down, because we saw that all during the pandemic, right? Everyone was ramping up end of 2019, going into 2020. You were saying that's exactly what happened to you.
Yep.
And then all of a sudden, March 13th, 2020 hit, and the world literally just stopped, right? And we had so many clients that were terrified to just go out to work. So the government made it easy. We'll pay you all to stay home. Everyone just stay home. So if you're in that position and you had a lot of bills to pay and you had all these receivables to collect, well, a lot of customers, companies were struggling to pay. So it's a big domino effect. With factoring, if you put that in place, you're protected by that. Because number one, we would do the collection for you. If your customer wants to pay in 60 days now where they normally paid in 30, well, that's what we do. Our job is to wait to get paid. So we have the tools to deal with that. So yeah, you need to, I think every business needs to have some kind of financial literacy so that they understand what it looks like when things are going bad and just prepare for it a little bit.
And we're going to teach people that at the Enterpriser Conference, right?
Yes, exactly.
Awesome, good.
Yeah.
Tina, it's been really, really great to chat with you. I really appreciate you coming in. Again, I can't stress how much I think this is going to be a great partnership, but I think it's really, really serendipitous that you guys were in the city the week that we're recording these new shows with going live on YouTube as well as on all the other channels. So thanks very much for coming. I appreciate it, and I'm really, really looking forward to seeing you guys. And for the entrepreneurs listening, have some questions ready for the JD Factors team. They will help you. I've known about factoring for years, but there's a lot of people that I still meet on a daily basis who have never heard of it. And I'm like, hey, look at this option. There's more options out there, right?
Yeah, well, we're really grateful to you, Liam, that we could do this and we could be a part of your enterprise show in April. And we hope that we can teach a lot of Atlantic Canada just what factoring is.
Thanks, Tina.
Thank you.
Love the chase and the hunt, and I set the pace when I'm running. I always take what I want and I always give it 100. Don't need a bank, no I'm funded. Play the game like it's nothing. I'm always thankful for something. Don't take for granted, stay humble. Now wake up! It's time to look at the enemy. Look in the mirror if he is no friend to me. It's not working out, maybe it's the chemistry. It's time to break up so I can make a better me. Better believe in your mind, cause it's everything. You can mold, shape, find almost anything. All it takes is some time